Hello, Maverick traders, and welcome out to your daily currency recap. This is August here, and I'll be breaking down today's market price action. It's a Wednesday, February the 19th. Let's get into it. As always, we'll take a look at broader market analysis, take a look at what the currency basket is telling us, take a look at the news, and then we'll take a look at some possible setups ahead. Let's get into it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
So jumping into the market analysis, let's see what we have seen change from yesterday. Not a whole lot. We actually have the equity markets that is breaking out to new all-time highs. So we'll take a look at the chart, but we are seeing the equities slowly sort of going on to the upswing here. The tariff news that was bogging down the markets in the last 2 weeks sort of kind of taking the back seat here. So we're just seeing a little bit calm markets and a little orderly movements. Now, if you take a look at the RBNZ last night, we had a rate cut, so 50 basis point rate cut. And that, again, was something expected, but we did see notice of whipsaw off of that the event. And we'll take a look at the price action there. But outside of that, currency markets, not a whole lot of change. Coming from that very extreme volatility in the last couple of weeks. Even last week was a great sort of a movement in the markets, especially yen crosses. But right now, we're just seeing a bit of a calm. So that's just what we have in front of us. Let's just take a look at the percentage change, and you'll notice that calm, you can see that in that percentage change. Well, Aussie, Kiwi basket, mostly flat, Euro pound, CAD, slightly lower. These are not the most impressive numbers. The only big number today we have is the yen. So remember, yen is something that we talked about. It's actually constantly getting bid over here. So we're just going to take a look at it and see some possible setups there. So yen look interesting, but outside of that, we saw a bit of a slight jump in the dollar, but not a whole lot. So that's really what we have in the currency market. Now, if we take a look at the broader markets, you can see the S&P slightly up. Again, it's not running up to the races as it's breaking out. It's still very muted sort of price action. The World Stock Index slightly down. We have the crypto market making a bounce after yesterday's loss. So again, not following its trend, but back and forth price action. Gold was mostly flat and oil slightly higher. So pretty flat, boring day across there. And as we take a look at the crypto market, you can see Bitcoin, lagging there. So it's not really giving us a good trend. Litecoin is the one that's performing well. But remember, crypto works on momentum, and that's really where the momentum is. So if we take a look at our market outlook, so what's changed? Let's just take a look at the chart. And you can see that we were right up hovering around the resistance, and today we just get that breakout here. So you can see that after the breakout, the most important thing to watch for is a continuation. A lot of times we break out, we can fall right back under, and that would called a false breakout. We can also have a bit of a inside candle and then continue moving up. So again, like I said, it's not really running up to the races. The volume, again, nothing too exciting on the volume front. So want to be cautious, whenever you're coming out of the ranges, and it doesn't matter that range lasts for a month, 2 month, 3 month. Every time you're coming up across these resistance and support, you really have to take it with a grain of salt and see if this is a true breakout, because you don't want to get caught up in a false breakout. Now, if we take a look at the news event, so this week again we have tons of data, but none of that data is really causing that big movements. If you take a look at the next 24 hours, again, we have the Aussie employment report tonight. So they're looking at a little uptick in the unemployment rate. But outside of that, really, tomorrow is a bit of a calm day. Not a whole lot on the schedule. I think Friday is definitely more important because we get those services PMI from the UK, Euro, and the US. So those are the ones we're going to watch out for. But let's just jump to our currency analysis and take a look at where the velocity score is. And if you just look at the velocity score, it's pretty spread out. But one of the things we want to take a look at is, is there anything in a +3 or a -3 in a currency world? The only thing is a +3 is it's crypto, it's a Litecoin. Now we have a +2 and a -2 here, but you can see that the only +2 that I like that is following with that trend is the yen. Now, British pound, euro, they're all sort of sliding here, a bit of relative weakness. So let's just jump into our possible trades ahead and let's just take a look at those setups.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
So let's just start with the good old US dollar. So you can see that the dollar I talked about yesterday, this is a key level of resistance, and that's really where we're stalling here. Now, if I take a look at the daily chart, what we're getting is a bit of a bounce. It's a much, we call it anemic bounce. It's nothing like how what we were getting here. This is a very muted response. So this is why, it's not a screaming buy, it's not a screaming sell. You want to short the dollar, look for the next level to be broken. You want to buy the dollar, you got to have this, the currency basket get above this 50-day moving average. Until then, it's mildly, I would say, a mild bullishness there. Now, on the other hand, yen is the one that, constantly is sort of recovering here. You can see here's a chart. We got a big recovery over here. And then after that, you can see that it's gradually moving higher. So if I really have to take a bet or take a trade, I think I'd like, the long the yen, definitely. But, it's not unlike last week where, we had that massive move, this is more aggressive price action. This is what I call more muted, mildly bullish sort of a price action. So buying the dips definitely is still the strategy on the Japanese yen. Now, if I go into Swiss franc, well, I look at this currency and say, well, can't figure it out. We got the support here. I've told that before, where it's below this resistance level or these moving averages, but nothing too exciting here. The euro, on the other hand, is definitely sliding, and you can see that. We talk about market conditions. You're getting these conditions where it's good for 3 days. Now it's down for 4 days. Before it was down for 3 days. So a lot of things that are, not lasting much longer than 3-4 days. So you can see that this thing is range bound. This is the resistance here. This is support. At this point, it's getting close towards the support area. Now the British pound, on the other hand, same thing. You got a resistance here. We got a support here. I won't be surprised, considering these ranges are more predictable, that we see a bit of a more further pullback in the pound. Here we are with the CAD, and you can see we got this big enthusiasm after the things got pushed with tariffs. But remember, we are February 19, and that tariff date is coming very soon. 30-day deadline that they had, it's coming up at the beginning of March. So, is that drama's going to come back again? Well, we could. So the thing is that now we know what to do when we see that kind of volatility. But yeah, it's not really going anywhere. I would be very cautious with the CAD here. I think there could be some more further downside pressure until for the next maybe a week or so till we get the main deadline, the another deadline that we have out of the way. Australian dollar, well, this is like watching paint dry. It's very sideways. Not a whole lot of implied volatility during the day. But one thing that you do notice is that it's constantly pushing above that resistance. So remember, one of my rules is that I want to see a confirmed breakout to buy that, breakout there. But you can see that each time we pierce through, we did pull back. And here we are, another scenario today. It just didn't do a breakout. So at the same time, it's not really falling apart. So sometimes, you get those two-way trades where, you got the support resistance and we see a back and forth. This thing is like a one way where, it's mostly up. We haven't seen things correct as much here. So, if I had to take a look at the Aussie, cautiously bullish, but not really bearish as much here. And then lastly, we have the Kiwi. And you can see that Kiwi is also range bound. We got this little big whipsaw yesterday. And this is something that played out exactly how I had had it in my mind. That initial price action would be to the downside, and then we'd see a bit of a recovery. But this recovery was definitely strong. You can see that right after that rate cut, we got the RBNZ press conference, and then things really took off. So is Kiwi a buy here? Well, if you take a look at it since yesterday, it kind of gave up a lot of those gains here. It started off pretty much here, and it's ending up here. So it's not really moved as much. So I don't really love that, but let's just take a look at the Aussie Kiwi, because that's the one pair that I was finding interesting as it was against that key sort of a resistance level. And here's the Aussie Kiwi. As you can see yesterday, we got a big reversal here. This is the daily chart, and this is what I was kind of looking at. Yeah, so we got a double top right here. This is again 111.40 is a resistance at this point. Which way is it going to go? Well, you can see that we got a big breakout. Pull back when making a recovery. If this recovery fails, I think that will mark a bit of a turn in the Aussie Kiwi here. But right now, as you look at this chart, it's kind of back to really where we was. So it's almost like we got this big roller coaster move to go back to where things are. Now, let's just take a look at some of the yen pairs, because the yen pairs are setting up nicely. Here, starting with the dollar yen, you can see that thing is right up against the support. So this thing is more consolidating. Just keep in mind that 115 area will be an important level of support. So this is where you get to like draw these alerts and, trend lines. And I'm going to add an alert there. Hey, notify me when it's really breaking the support, because I think that's where it's going to be more meaningful. Right now, there's a support here, but from that point on to this level, it's not a whole lot of difference. So I would rather wait for this level to be broken. And I think that's really where we're going to see a much more of an aggressive move. But things have been moving mostly in that predictable range here. We can take a look at the yen crosses against everything. So here we are with the CAD yen. You can see that slide there. These rallies are good opportunities to kind of short into. So a lot of these yen crosses kind of look similar. We had a massive rally in the pound. It's slowly moving lower. So these are what I call it, like, you can't be too aggressive with this because these bounces are pretty strong. I mean, you can see that this was 100% recovery before it really started to roll over. So, this is something that you want to use maybe less than half a position size and slowly like scale into it as it's moving in your direction. So as franc yen, like I said, like a lot of these yen crosses look very interesting to me, but they are up against some key support levels. I really need to see that level support break for me to give a confirmation that it is ready to sort of rally and these bears sort of roll over. If I go in the long term, this again, there's definitely a lot of air to be deflated, but it's a matter of getting that start. But until we really see a catalyst, I think we need a catalyst. Until then, we expect maybe a bit more of this similar price action. Here we are with the dollar CAD. I had some questions about the dollar CAD. So you can see the dollar CAD had a big support. It did break lower, and now it's just making a recovery. So these recovery efforts are there. In the shorter term, things are momentum turning a bit higher. So I would be a little careful with this dollar CAD here. I know a lot of currency pairs, they look decent, but they're not really breaking a higher or lower. Here we are with the Aussie dollar. You can see that after making that break. I mean, look at the size of these candles for the last 3 days. It's not a whole lot. So looking for either a break for a continuation or a break lower to fall back in the range. So dollar pairs, I'm not really in love with the price action. It's kind of inconsistent. It's not really breaking out. It's not really falling apart. But you can see that things are just moving in the range. So in these situations, you want to take the profit when you have them, and you want to be more strictly trading those ranges rather than buying the breakouts. So in conclusion, I think the range-bound condition likely to continue. I don't expect a change until we see a big breakout. Follow relative strength of weakness, follow the momentum, use the strategy that doesn't, get you in for too long, because, it's pretty hard to figure out where the trend's going to go because we don't have a whole lot of trend in place. So take advantage of momentum and then take profits when you have them, and just trade it accordingly until we see a change in those market conditions. Thanks for joining. See you in the next one. Happy trading.